Okay, you've got the market, which is under pressure, down by about 100 plus points, 110 actually, 11,712, and not very far away from the day's low. You're with us here on a fresh new edition of Mid-Cap Radar. I'm Prashant, with me, my colleague Sumaira. Hi, Sumaira.
Hi, Prashant. Good afternoon. And, it's this pressure in the market that continues unabated. And the same set of triggers, probably, exposure to vulnerable groups, monsoon deficiency, and, pretty much the same culprits. But as we speak, the market has lost about 1% on the frontline indices. The mid-cap index not too far behind. Financials are losing steam. The Sensex is getting close to that 39,000 odd mark. So I wonder if this selling could actually get a little more accelerated in the last 2 hours.
I mean, entirely possible, Sumaira, because this seems to be a problem very much for the market here in India rather than a big global sell-off or anything of that sort. Under pressure. One additional point of news which came through in the morning, and actually this is information we got, was that the monsoon rains are tracking at a deficiency of some 42-43%. I mean, this is just June, but we spoke with SkyMed, the private weather forecaster, was saying that rains actually have not picked up. The momentum has not picked up from the southern peninsula yet. It's a pretty poor situation. May pick up, but it's a very poor start in that sense to the monsoon. Let's kick it off with the headlines as we always do, and then we'll sort of come back with more. Market continues to decline after breaking key support levels, dragged lower by RIL, Axis Bank and metal stocks. Mid-cap index is under pressure.
Shriram Transport and Piramal Enterprises are in focus as well. CNBC TV 18 Newsbreak confirms Piramal Enterprises has sold their entire 10% stake in Shriram Transport.
In an exclusive conversation, Yes Bank's Ravneet Gill tells CNBC TV 18 they are confident of completing their fundraising exercise by the second quarter of this year.
Jet Airways takes a further knock today. CNBC TV 18 learns that the PMO has now sought a review on the progress in the NCLT Gen irrigation to Hertz after promoters create a fresh pledge on 35 lakh shares.
Global central bank meetings lined up. Fed kicks off their meet tomorrow. Fed funds futures points to 80% chance of a July rate cut. Bank of Japan and Bank of England also to follow later this week. Okay, so those are the headlines, top stories. Let's bring in Ashwini for a quick check on things. Ashwini, thanks very much. So we were done 110, we're done 120 now. What is your reading, Ashwini?
Today seems a bit different than other days. Today, the blue chips are falling like mid caps. So both the HDFC twins are falling, Bajaj Finance is falling. So Reliance Industries is down. So now that smaller stocks have fallen, I think there is probably some bit of sell-off that you can see on these private banks and all the halo type stocks. So my sense is that you have further downside, and maybe 11,600, 650 should be round the corner. And today, you have things like Kotak, HDFC Bank, Axis Bank. So all these large stocks, who really owns them? So it is those large mutual funds and FIs, etc. So that is where in the next couple of hours you could have a bit of a sell-off. Having said that, Bajaj Finance is a sell with a stop of 3,500, target of 3,380. CAT is a buy with a stop of 930, target of 965. And HDFC Bank is a sell with a stop of 2,440, target of 2,380.
Trade broadly across the board on the short side, right, Ashwini?
Yes.
Okay, all right, fair enough. Ashwini, thanks very much. Appreciate you joining in with essentially those quick comments. We've got a discussion lined up on the retaliatory tariffs which is India's imposed on the US. Jain Dasgupta is former Indian ambassador to the World Trade Organization. He's joining us right now on the phone line. Mr. Dasgupta, thank you very much for your time, sir. It's a pleasure. Appreciate you joining in. First of all, will we see a reaction from the US to the will we see retaliation to these retaliatory tariffs?
It's very difficult to predict, but having watched the U.S. vis-a-vis China and the EU and other countries, there could be some threatening and aggressive gestures of the U.S. Whether they will translate into tariff imposition on other products of India remains to be seen. But what I anticipate is that there would be raising of the ante, turning on of the heat on India by the Trump administration in some form or the other as a response to the retaliatory tariffs that we have just imposed.
Would in cases like this, would the US have been given advance notice of something like this that was under the works? Because the tariff increases by India is in response to a US move earlier, right?
That's right. That's right.
So would the US have been kept in the loop?
I presume it would have, but in any case, we had, in last June 2018, we had said we would impose tariffs, and then we had deferred it on our own volition, and we had kept deferring it. So the US was on notice. It didn't require any further notice.
Right.
But having said that, goods which are on the high seas sometimes get affected because when they have left the shores, they anticipate a certain incidence of import tariffs, and when they actually land and are subjected to the tariff, it has gone up. So it poses a kind of a burden on the importers mainly.
Right. Can this spill over to other areas as well? We've got issues with regards to data localization here, which India's stand is very firm on that matter. But some other countries, large MNCs, although have agreed to comply, but it's not as if people are happily doing it. There is, e-commerce players and rules and regulations regarding to that, which is under deliberation right now. Could this tariff issue spill over on other things as well?
The data localization and other e-commerce related issues are under discussion not only on a bilateral basis with the US, but in the WTO there are discussions on this. Papers have been floated and a separate plurilateral group has been formed of which India is not a part. They're trying to forge together an agreement of the coalition of the willing and to then bring in India and other countries into it by sheer force. But that is some way off, some distance off. So it is not likely to get translated into more pressure on the data localization front. It is what it's likely to, turn into could be a threat to apply tariffs on products which go in large quantities from India and large volumes from India. So that is what it could translate into if the worst comes to the worst.
Right. IT services is a big export, right, into the US.
That's right.
Could we look at sort of pressure being brought to bear there as well by the US?
It could take place. Now, IT services exports take place in two ways. The large part of that is over the wire or the internet, and that is mode one in services. So I don't think there would be any disruption in that because it is a company-to-company transaction. But as far as the visa rules are concerned about H-1B visas, against which a large number of Indian IT professionals travel to the U.S., that could see a further tightening because the U.S. has already introduced a set of measures by which there is a great deal of additional scrutiny of the applications and a lot of rejections have taken place. So it could result in additional scrutiny and more rejections of Indian applications.
Mr. Dasgupta, if you were on the Indian side of the negotiating table, what would you tell, how would you handle the matters right now? Can we afford to give in a little bit, sort of keep peace, rather than sort of let this escalate out of control?
I think, in the interest of trade, and because the U.S. is our largest trading partner, accounting for more than 16% of our overall merchandise trade and an equal proportion of our services trade, we can't afford to have, a fight with them in the open. It would be better to, paper over our differences, to resolve our differences, and to move on. So we have to accommodate, to my mind, those American requests which are in which we have some elbow room, some discretion, and which does not affect our national interest adversely or our overall position globally in an adverse way. But having said that, if the U.S. continues to put unreasonable pressure on us to open markets, despite the fact that we have a huge development, imperative to satisfy, that we can't be expected to open up our markets on a par with the developed countries, and that there are technology areas like, for instance, the internet, e-commerce, artificial intelligence, etc., in which there is a lot of catching up to do. And if we open up our markets now in an unbridled way, we may have to repent it in the not-too-distant future. So we have to protect our national interests. We have to give in where we have some scope, some elbow room, and we have to keep talking.
Mr. Dasgupta, thank you very much, sir. Well put. Appreciate you joining in with those thoughts and comments which are coming through. Remember, we